The down day on Wall Street today. Overall, it has been a very strong year for U.S. stocks. And CCTV's Shraysi Tandon filed this reporter's notebook for us on the year in the markets.
Investors across the U.S. enjoyed a bull market in 2014, largely due to the strong economic data out of the country. Encouraging jobs, trade, and housing figures all help boost the Dow Jones and Standard & Poor's 500 index.
It's been a remarkable several years, not just 2014, but I think we've about doubled since the end of 2011. We had a correction in 2011, and it's been really great, and also great for bonds as well. Commodities have suffered, but by and large, the big asset classes, the two biggest asset classes, stocks and bonds, have just done extremely well.
The blue chip Dow hit a closing high over 30 times this year, and the S&P 500 index has more than tripled since March 2009.
The Federal Reserve poured a lot of money into the banking system. Some of that money is starting to find its way into the real economy.
While technology, banking, and pharmaceutical stocks enjoyed rallies this year, commodities did not share the same fate. Oil in particular was the hardest hit, as crude oil prices plunged to levels not seen since 2009. Some experts are confident that oil will regain its footing in 2015, but will hurt U.S. oil producers in the long term.
I do think that we'll get a upturn in oil as we get toward the end of 2015. I don't think that these low oil prices are not going to be with us forever, but they are going to have, I would guess, a permanent effect on the fracking industry, and that's not so good.
Many analysts expect the stock market to continue its solid gains well into 2015. But the U.S. Federal Reserve's plans to raise interest rates next year will really determine just how high the markets can climb. Shraysi Tandon, CCTV, New York.